Software stocks have been under pressure this year as investors weigh the potential disruptive power of AI. But can some companies in the space still thrive in this environment? Joining us now to discuss is Joe Bonner, Senior Analyst with Argus Research. Joe, welcome back to the show.
Good afternoon.
All right, Joe, we've seen a lot of volatility in the software stocks because, again, a concern about the potential for AI to disrupt their businesses, the so-called SaaS-pocalypse. What's your view, and has the worst passed for these stocks?
Yeah, well, to make a long story short, I think the worst has passed. Whether you call it the SaaS-pocalypse or SaaSmageddon, different words for the same thing. These companies, let's just take a couple of examples first. Salesforce.com, Salesforce and these companies are basically down 30-35%, in the last year. They bounced back like 6 to 7% in the last month. So you can see some easing of that kind of unease. Just taking a step back for a minute, what actually happened? This unease in the market about AI replacing software as a service company has been around for a year or more. Last November, Google Gemini 3 came out. A new Claude update came out from Anthropic. Anthropic also had later on a new application, a co-work application. These new models were a significant improvement, and they were aimed at basically enterprise customers. So that basically kind of crystallized this unease in the market that somehow the enterprise companies would decide we're going to do it ourselves, basically through AI, rather than hiring or licensing software from a SaaS company. I don't really subscribe to that thesis. I mean, I understand the market this is reality, and it had an effect on these share prices, but I don't really subscribe to it. It's kind of far-fetched to think that companies are going to just abandon software, these software companies they've worked with for years, and just kind of do it yourself. There's security issues. There's what these AI models are going to do with your data, and I see that there's kind of a opening for SaaS here, in that they can be the context layer on top of the AI model. Basically, keeping your data with a trusted kind of source, source of truth, and not really risking your data either through cybersecurity issues, or again what these AI models might use your data to train themselves on. You just don't know. There's always a chance that this fear could come back. New models will continue to improve, and it will impact the business models of the SaaS companies. Maybe they'll have to change from a seat-based pricing to more of a consumption-based pricing, or a tiered-based pricing. But I think there's opportunity here, as well as the markets identifying a risk.
Right. Joe, we've heard a lot about the massive amounts of investments or CapEx from a lot of these companies in the development of AI, especially from the hyperscalers. How have things been progressing on that front?
Well, the massive investment is continuing and accelerating. Companies we're talking about here are companies like Alphabet, Google, Meta Platforms, the AI companies themselves, Anthropic and OpenAI, Microsoft, Amazon. So massive increases in CapEx, hundreds of billions of dollars, billions with a B. Alphabet itself is looking at 175 to 185 billion this year. Microsoft, they don't provide any guidance, but probably over 100 billion, just looking at their first 6 months of the fiscal year. The question has arisen. There's these massive investments, and what is the return going to be? Right now it's a land grab kind of opportunity of these companies, trying to capture the market. I think there's a good amount of skepticism about how what is the return going to be? How soon is the return going to be? A company like Oracle that's actually borrowing to fund its capital expenditures. There's a risk there. And most of the bigger companies also have a lot of cash flow, so the riskiness of the investment is a little less. But still, you're talking about hundreds of billions of dollars. You don't want to make $100 billion mistake.
No, exactly. And you mentioned Oracle borrowing money from the capital markets to fund this AI development. Do you believe that the pace of AI development could be impacted by the conflict in the Middle East?
Okay, so I don't think there's a direct impact. I heard about an attack on a data center in one of the Gulf countries. You can't really. I don't think there's an impact there. Data centers are global; they're networked. If one goes down for a little while, I don't think that impacts things. The risk I see here is an indirect risk, and that comes from the possibility of an energy crisis. With these data centers and the progression of AI, we've always thought, chips, NVIDIA, the chips, getting the most advanced chips in as fast as possible would be the gating factor, right? And it's only recently come to the realization that power is a big issue for the development of AI. You think about, there's estimates out there that an AI query might take 10 times as much power or 30 times as much power as a traditional Google query. Power has become a real issue. If some type of energy crisis does develop, I think that is a risk for AI development.
All right. So with that backdrop, when investors are looking at this space, do you see any potential opportunity in this space right now? And if so, which companies are interesting to you?
Sure. As I talked about, Salesforce and ServiceNow have been beaten down. I don't see their business going away. I'm a fundamental analyst, so I deal with company fundamentals, and on a fundamental basis, they're still performing, double-digit revenue growth, margin expansion, EPS growth. So there is a fundamental, basic reason to take advantage of a buying opportunity. Now, say you say, you believe in the SaaSpocalypse. That I might be wrong. The area to go to really would be cybersecurity. The two of the companies in my coverage, CrowdStrike, and what's the other one? These companies basically have platforms of cybersecurity solutions, complete comprehensive platforms that are capable of defending an enterprise data. And you think about AI, agentic AI, the cybersecurity environment is becoming even more toxic. We've kind of seen this before, as with different types of technological innovations. And like a company like Palo Alto is the other one. Palo Alto and CrowdStrike. It's kind of a race between the cyber criminals, leveraging AI to make the attacks more automatic and more dangerous, and the cybersecurity companies, racing to find the solutions. Identity becoming, one of those areas where we've seen a lot of both development and M&A, kind of realizing that with agentic AI, you might have a couple of thousand employees, you could have hundreds of thousands of agents out there. How do you manage the access to your systems by all these agents? How do you manage that identity, all those identities? This is a real opportunity for the cybersecurity companies.